what are we learning from the communication strategy of the global central banks, especially in the challenging context? It was indeed a busy week for major apex banks, and the pressers were very insightful. Hello, this is Badejo-Okunsanya on Global Business Insights, where we bring ideas and discussions on the business headlines. The South African Reserve Bank yesterday cut interest rates by 25 basis points, citing easing inflation but still maintaining a hawkish stance amid heightened global risks and uncertainty over U.S. monetary policy. Let's hear a clip from the governor, Mr. Lesetja Kyanyahu.
We expect potential growth to trend higher over the next few years. This gets growth to about 2% by 2027. Headline inflation averaged 4.4% last year, near the middle of our target range. Inflation slowed to 3% in December, having started the year above 5%. Inflation is likely to remain in the bottom half of our target range through the first half of this year. The risks to the inflation outlook are assessed to the upside. In the near term, inflation appears well contained. However, the medium-term outlook is more uncertain than usual, with material risks from external environment. Domestic factors such as administered prices are also problematic. Against this backdrop, the MPC decided to reduce the policy rate by 25 basis points with effect from the 31st of January 2025.
The European Central Bank also cut rates by 25 basis points yesterday, although ECB chief Madame Lagarde is not calling it a stagflation. She admitted that the euro area economy is set to remain weak in the near term. This was as Eurozone GDP came in unchanged in Q4, also lower than consensus expectations for a 0.1% rise, while Germany's economy shrank by 0.2% quarter-on-quarter in the 3 months to December. Eurozone bellwether Deutsche Bank's CEO Christian Sewing said profits plunged 92% last quarter, pledging to consider exiting weaker businesses to improve performance and also promising to unveil a new medium-term strategy this year. But back to communications or central bankers. The best practice seems to be using summary statements of the rate decisions after the policy meeting, but about half an hour before the actual press conference. In the US, about every quarter, we also get ahead of the presser a summary of economic projections and dot plot showing how committee members see the interest rate trajectory. All this helps to provide the context for a useful press conference. Preparing your audience with pertinent information or a summary of the key message ahead of a press conference sets the ground to avoid misreading speakers. We see the same pattern with quarterly videocasts which come after formal earnings releases. It is good indeed to make data interpretation easy to follow and to sell your case from the perspective of your key stakeholders, especially your audience at the press conference. A clip from Lagarde's address to the press yesterday after the rate cut decision.
The Governing Council today decided to lower the 3 key ECB interest rates by 25 basis points, in particular the decision to lower the deposit facility rate, the rate through which we steer the monetary policy stance, is based on our updated assessment of the inflation outlook, the dynamics of underlying inflation, and the strength of monetary policy transmission. The disinflation process is well on track. Inflation has continued to develop broadly in line with the staff projections and is set to return to our 2% medium-term target in the course of this year. The economy is still facing headwinds, but rising real incomes and the gradually fading effects of restrictive monetary policy should support a pickup in demand over time. We are determined to ensure that inflation stabilizes sustainably at our 2% medium-term target.
On Wednesday, Jerome Powell was calm despite pressures from the president. He did not come across as adversarial nor appear to be coming under the influence of the executive branch.
Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer-run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. I'm seeing it really as one question, though, so I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work, and that's how we best serve the public.
Can you just comment on whether he's physically communicated this demand to you?
I've had no contact.
Thank you.
Thanks.
The main takeaways from my perspective: first, the Fed seems to be buying time with full optionality for the March meeting, allowing maximum maneuvering space depending on the data and the policy of the incoming administration. Second, the statement reads less confident in terms of progress on inflation. Many see a stickiness with risks tilted to take inflation higher depending on how and when tax rate reductions and trade tariffs are implemented. But the Fed did not see the labor market as a source of inflationary pressures. Then it is also looking more like a prolonged pause. You could call it a slightly hawkish slant rather than a short pause. But everything seems to be well laced with high uncertainty, still elevated inflation, solid labor market, plus an economy hardly in need of rescuing. Finally, in summary, it's about the data, which can be hard to predict, and also about new policy thrusts. What is unusual for the Fed is two dimensions of uncertainty to juggle, complicating today's decision and compelling them to simply wait for better clarity. Leaders usually leave themselves enough room to maneuver. Powell was proved right in saying there is no hurry to help the economy as U.S. gross domestic product came in days after the Fed decision, showing 2.3% growth in the fourth quarter, still a healthy pace to close out 2024. But things also do go wrong. You remember 2 years ago, central banks chorused that inflation was going to be transitory. It was not. Now they are more cautious on limitations of their models and warn that the dot plots are not forecasts, and even the so-called forecasts are subject to regular revisions. For central banks, independence, analytical rigor, and integrity are all paramount to building the trust that is key to their success. Chief Badejo-Okunsanya, a doyen in the field of communication, has just been appointed by the Nigerian Institute of Public Relations as chairman, board of the Nigeria Reputation Management Group. He speaks on the importance of paying more attention to image management as part of corporate communications strategy.
Now, the world is fast changing, and the most authentic sense you need to operate is trust. To build trust, you need strong reputational capital, be you a corporate organization or government, or even a non-governmental organization. But how can you build this in a very fast-evolving landscape? One, you must take your communication very seriously. You must be very intentional, and you must be very deliberate about the kind of brand you want to build, about the kind of communication you want to have with your various stakeholders. There are too many organizations that are not paying enough attention to their communication, and therefore it is affecting their reputation, or it will affect their reputation sooner than later. Number two, integrity. And that integrity must go beyond being skin deep. You must not just be seen to have integrity, you must actually have integrity. And that may cost you as an organization a lot. You have to go think corporate governance is key. especially if you want to be a sustainable organization operating in this time that we're in. Number three, however, your approach must be, you must hold tight while you may not compromise your integrity, you must be able to change your language and your approach. The way communication is not done until it has been confirmed to be received by whoever is listening or whoever is the recipient of the communication. So language is evolving, and when I mean language, I'm not talking about English, I'm not talking about French or Chinese and so on and so forth. I'm talking about the ability to reach a wide demographics of people. And when I mean, again, demographics, I'm talking about age groups and all of that. The way you communicate with somebody who is a Gen Z is not the same way you communicate with a millennial. So there's this assumption that communication has been done as long as you've pushed it out. That's not true. So you must be able to have feedback. You must be able to measure the communication and the depth, the breadth, and the understanding and the acceptability of the communication. Number five, I believe you must be crisis ready. You must be crisis ready. In this world of today, there are many things, because of our evolving form of communication, technology playing a significant role. Within minutes, an organization can find itself in very, very deep waters if it doesn't have a crisis policy in place. Because within minutes of something happening, it goes global. And so in those days, the first things you learn about crisis is to contain it. You have a challenge in doing that right now.
Some other business headlines. The major US stocks indexes closed in the positive yesterday as investors considered earnings from the Magnificent Seven, and Trump announced intentions to implement 25% tariffs on goods imported from Canada and Mexico. Apple reported December quarter earnings of $2.40 a share on revenue of $124.3 billion, beating expected earnings of $2.35 a share on revenue of $124.26 billion. Revenue in China, however, fell to $18.5 billion compared to $20.9 billion expected. Also, sales for iPhone slightly dropped. CEO Tim Cook commented that iPhone sales were stronger where Apple Intelligence is available. Apple shares were higher after hours yesterday as stronger services revenue overshadowed the miss in iPhone sales. Italy's Data Protection Authority has asked DeepSeek for formal responses on how it handles Italians' data, what personal data is collected, where it comes from, and what legal basis it has to process that data under the European Union's General Data Protection Regulation, and also if data is stored on servers in China. Until it gets satisfactory responses, DeepSeek will not be allowed to be sold on Apple and Google app stores in Italy. Also, Jan LeCun, chief AI scientist for Facebook AI Research, says there is a major misunderstanding about how the hundreds of billions of dollars invested in AI will be used, and that the meltdown over DeepSeek is an overreaction and woefully unjustified. The US is also probing to see if DeepSeek found ways to bypass its restrictions. December retail sales in Germany contracted further 1.6% month-on-month, after a 0.6% decrease in November. Asian shares were mostly higher after Wall Street rose overnight as investors digested big tech earnings, and gold hit record high to $2,798 per ounce. Investors are nervous about potential US tariffs and a growing gold stockpile in New York, causing shortages in London. Well, that's it on this episode of Global Business Insights. We again remind you that you can watch us from next week on Business Day TV YouTube channel. That's Monday to Friday at 11 a.m. West Africa time. Thanks for watching and enjoy your weekend. This is Bode Oshosami. Bye-bye.